Hi, guys. Welcome to our next session of this masterclass. And today we'll be discussing investing in Torrens title properties. So let's get started with housekeeping. Amanda, over to you.
All right. If you've been to our masterclasses before, you'll have heard this all before. So, brokers, accountants, your professionals, we work alongside them. We don't replace them. You still need your broker for finance. You still need your accountant for tax purposes. So, we are your strategic partner. We help you select and strategize your property investment journey, but we don't replace the people that are there to help you professionally as well. So if you take a look there at our legal disclaimer, we make it very clear that the advice given in this masterclass is general because we haven't taken an assessment of your situation. There are many of you here, and we are speaking to all of you equally. If you want a more personalized discussion where we do take into account your circumstances and your finances, you'll have the opportunity to book in with Dragan for a 15-minute call.
Yeah.
Now, this webinar or masterclass is a pair with its twin. So today we're talking about Torrens titled properties. This webinar features hand in hand with the one on strata titled properties. So if you've already watched that one, then you'll find this one a little easier to digest. Or if you watch this one first, we highly recommend going back and watching the other one because we're looking at comparing and contrasting strata title, so units and townhouses, with Torrens titled properties today, which are your houses, freestanding houses on land. Now, that could be, duplexes or house with granny flat, but it's your land and your dwellings. You're not part of a shared or communal space like you would be with a strata title property.
And as always, feel free to scan the QR code or visit propertysessions.com.au/15 if you want to book a call and you have any questions that you need answered, please do. A little bit about myself. Again, guys, you may have heard this. Feel free to fast forward this part if you have. If you haven't, here I go.
Welcome.
Welcome. So growing up, migrant parents from overseas, from former Yugoslavia, moved over to Australia in the 70s. I was born here. Typical loving European parents, struggling to make ends meet, grew up in commission housing. I was the only son growing up around, children who had the Nike shoes and the Adidas gym wear, where I was wearing the Kmart and Target stuff. So obviously that sort of triggered something inside me when, growing up, there was a desire to have when I didn't have. And fast forward in my 20s, I started a business, being a photography studio, still having that desire to, create some sort of wealth for myself. I had gone into educating myself with property investing. Obviously did a few mistakes at the beginning, and then, fast forward 20 something years later, happily married, 2 kids, successful in what I do. Built a decent portfolio through property, in a position where I can take a holiday when I like and not have to answer for anyone, right? And also, most importantly, teaching my kids in the way of investing and business as well. So, hope that helps, Amanda.
Yeah. So I am a generation behind Dragan. I'm the grandchild of the migrants. So my parents had to do what Dragan did, self-teach, learn, go out on their own, figure it out. They had the guidance from their parents in the sense that they knew that property was something that they could use to get ahead. But, with my grandparents, they don't speak English. They didn't have the same access that my parents had to information and knowledge and sharing with each other and, helping each other out. They didn't have the internet, they had each other. And then they passed their wisdom down on to us kids. So we never got handouts. We just got a bit of a butt kick, and that was enough to get us started. So they had a rule that we had to purchase a property before we were allowed to go overseas. We basically were not allowed to spend our deposit. They always encouraged us to save. We worked from a young age. We had savings, but we were not to spend those savings on a plane ticket until we purchased a property. My brother actually, I don't know if he'll like me saying this, but he signed a property contract and bought his plane ticket the same day. He's like, "I'll buy anything, anything," because he'd committed to his mates to this holiday. I don't know if we should edit that out or not, but
Oh,
we laugh about it because he did them both on the same day just to appease mum and dad. But in hindsight, all three of us kids are grateful for it because we're all, married with kids, and it's a different life when you don't have to worry about those things because he started young. So at the time, we fought mum and dad. I'm sure if they were sitting here, they would tell you. But now we're all very grateful for it. So my journey wasn't about access to knowledge. It was more about motivation. I wanted to be 21 and have fun. I wasn't thinking about property. I wasn't thinking about how to make my life easier for myself at 40. I was 21. My priorities were on another planet. So for me, it was a motivation issue. It was a I'll worry about that tomorrow issue. And what we find, with a lot of clients or with a lot of people is they'll get to a certain age and they go, "Oh, I've left this a little bit late. How do I make up for lost time?" So I'm very grateful that I didn't have to worry about that side of things. And I can very much vouch for the benefits of starting as soon as you can. The best time to buy a property was 20 years ago. The second best time is now. So that's why I'm now doing this, much to my parents' satisfaction. I'm repeating their words that I fought so hard against to everybody else. So that's my story.
So buying Torrens title properties, and look, the freestanding houses, this is exactly what I recommend to most my clients, I guess, and what I've been doing for several years. So my journey at the beginning, I'm not sure if we have covered this before. A few of my first three investments were apartments. They were strata apartments, and I've learned from the mistakes, eventually getting, educated and a mentor as well to guide me to a different way. So we're going to be talking about freestanding houses, so Torrens titled, and these are pretty much my favorites. Amanda.
All right, these are my favorites as well. I quite like Torrens titled freestanding houses. For a number of reasons. I've listed a few there. It's government guaranteed ownership, so the title is indefeasible. What this means is when you buy something on Torrens title, if you are the registered owner of that property, then you're fully protected as the registered owner of that property. Now, we can get into, legalities around if a property is fraudulently sold and you're the purchaser and all of that. Basically, just know that if you are the registered owner of that property, you own it fair and square. So it's clearly defined ownership, and that includes, when I say you own it fair and square, I mean things like the boundaries. If your fence is built in the wrong spot, but the title says that the fence is here and the boundary is here, you own that land no matter what. People talk about things like squatters' rights and all the rest of it. Again, without getting too far into the legalities of it, just know that under Torrens title, you're quite well protected. Things like your rights, easements, mortgages, all of that's listed on the title. You know when you purchase a property what you are purchasing because it is clearly defined. You know if there's easements, you know where the boundary is. And that doesn't mean the boundary is necessarily where the fence is, or that doesn't mean that, there's not an easement under there and it's in the contract. You still have to access that information by looking at, the DP and the title documents, but know that that information is available to you. Low risk of disputes because that documentation and registration of ownership is there. People go, "Oh, but the fence has been there for 30 years. Doesn't matter.
Yeah.
It's Torrens title. It's where the boundary is. So it protects you against any of those confusions, regardless of whatever agreements there may have been between previous owners. So it's full freehold ownership, and you own both the land and whatever is constructed on the land. So the buildings, sheds, anything that's not movable is owned by you. You don't have any strata fees or shared property obligations or costs either. So you have complete control and complete ownership of that property. In terms of mortgaging and finance, lenders prefer Torrens title properties for that exact reason. The security of what they're lending against. It's clearly defined, therefore its value can be clearly determined by a lender, and they can lend against that with minimal risk because there's maximum information available.
That's right.
So I quite like Torrens title just for that purpose alone.
When you say maximum information, can you explain?
Yeah, so all the information in terms of due diligence is available to you. So it's an existing block of land with an existing house on it. You're not buying something that doesn't exist yet. For example, like off the plan. If you're buying, in a new development where you're buying, a vacant lot of land or a house and land package that doesn't exist yet, it's not Torrens title. There's no title yet. So the developer has proposed a master plan or got their council approval for their plans, but it's still negotiable within certain tolerances.
Yep.
So, for example, they might shift the boundary a little bit to accommodate an easement for sewerage, or they might drop the size of the bedrooms by, 5% to accommodate rising building costs, and you're on a fixed price contract and they want to protect their margin. So, up until that title exists, things are movable.
Yep.
Once that title exists, it's established, you can view and see, that what's registered on that title, and it's not negotiable. That's what it is. Now, that doesn't mean down the track that, if you negotiate with next door and you want to do a boundary realignment and you go through council, you do it properly, one of you buys a portion of the other one's land and you register it on title, that's a different story because it's done properly. But in terms of off the plan, certain tolerances before the title exists are permissible. So is that what you meant when you asked that question?
Yeah. But you can also clearly see when you're, purchasing a house in a well-established area, you know what the value of that property is just by going back and checking the history and within that area for a very similar house, same size, sold for, 1.1 million 6 months ago, or sorry, 3 months ago, and another one 2 months ago sold for 1.15. You know the value of that property, of your properties, or the one you'll be purchasing, is around there. So given, of course, it's in the same year, built year, and the renovations have been roughly the same.
Yeah. So if you're working your way through all of our masterclasses, we've got another masterclass on buying new versus buying established. If this sort of thing interests you, definitely check out that masterclass because we look at the pros and cons of buying something already built versus something off the plan or that's not quite finished being built yet. So definitely check out those masterclasses if you want to see that comparison between buying new and buying established. So just to reiterate here, buying Torrens title, so you know about easements and covenants, restrictions on the use of land. So for example, things like knocking over trees or whatever other use of the land, if you want to add a granny flat, you'll know what's allowed. Zoning, bushfire ratings, unauthorized work. So if there's extensions on the property that weren't approved, they might not have the occupation certificate for, whatever additions were made on the sly. You can access all that information and boundary issues, for example, the location of the fence or, whatever issues exist between neighbours. So Torrens title gives you the opportunity to mitigate against all those risks and you make a fully informed decision. So the other advantage of Torrens title over strata title is control over costs. So if you've already seen our masterclass on strata titled properties, you'll see that we went through a lot of the hidden costs or the unexpected costs or the ever-changing costs that can come up when purchasing on strata. None of those apply in this case with Torrens title. You don't have to worry about strata. You don't have to worry about special levies. You can undertake renovation works without seeking permission from the body corp. Major renovation works or structural renovation works may need to go through council depending on what you're doing. For example, extensions will need to go through council. But if you're replacing a kitchen, go for gold. You can replace your kitchen. Whereas in a strata title property like a unit, if the kitchen needs redoing, you've got to sort that out with the body corp, get permission, access for trades and so on. You don't have to comply with any bylaws. You don't have any unexpected costs, unexpected repairs and maintenance in terms of in common areas where you can't control the timing or the trades that are used or the extent of the works that are done. If you own the property and the property manager says, hey, we've got a busted sewage line, do you want me to call someone? Well, you can go and get a bunch of quotes, or if you know your own plumber, you can use your guy. Whereas in a strata building or a strata title property, you don't really have control over those things because you're one of many and your vote is one of many. So complete control with Torrens titles, no common areas, so you don't have to pay for things like upkeep or upgrades. And of course, you can undertake maintenance and repairs not only at your cost, but in your time as well. So if you know that a tenant's going to be moving on soon, you might schedule renovations between tenancies. Or you might manage your costs to land in a certain financial year over another financial year. You don't really have that control with anything on a strata title. So if we look at Torrens title, there's two ways people sort of lean. If you look at the photos there, you can see that one of them is of a newer house on a smaller block of land. Nice big, McMansion,
Yep.
as they say. The other one is a smaller, more dated house, but with a much larger land component. You can see the size of the yard there, and you can see that it's a corner block. So if I'm buying something to live in, I'm probably going to be drawn towards the newer, bigger, shinier.
Yeah. Again, it's a lifestyle choice.
Lifestyle choice,
Yep.
emotional choice. You're
Yep.
looking at where you're going to be happiest.
Exactly.
But if you're looking at an investment, that larger lot on the corner
Yep.
might have a little bit more potential. So just because something is Torrens titled, that doesn't automatically make it a good investment.
That's right.
There are still degrees of quality within what is Torrens titled. So I want to do a bit of a comparison there between the larger house versus the larger land. What do you pick as an investment? Bearing in mind, like Dragan said, we're not talking your primary residence. Different method of thinking. As an investment, what would you pick? So with a larger house, you've got a larger dwelling. So you're paying more of your money, or a larger proportion of your money goes towards the cost of the larger dwelling. The dwelling is what depreciates. If you check out our masterclass, our big masterclass, we talk about depreciation quite a lot there. We also will have a depreciation masterclass on its own, because we get a lot of questions. Like, that's a topic of its own. So we're working on creating a masterclass for that as well. But in essence, the house will depreciate. So by buying a larger house and paying more for it, you are basically spending more on something where you're losing money compared to the land value, which is what increases in value.
That's right.
So where we've got their larger land, the land depreciates. The land is what goes up in value. What is on it is just your means of generating an income. So that's your rental income, but your investment is in the land. The larger house, you will get longer term, higher quality tenants, because you're more likely to get a nice big family in there. They're committed to the school catchment. They might, have a pet, or, kids that go to school. They might, just establish roots. The house is big enough. They're not likely to outgrow it. So you will get longer term tenants there. But then the larger land will have future value add potential. So you might add a granny flat. It's got a corner lot. You might subdivide it. You might knock down the house and rebuild it later. So you might buy something older at land value with an older house on it. And then in 10 years, once you've got a bit of growth on it, knock it down, rebuild it, and convert it into the larger house investments. You get your longer term tenant, get your cash flow, get your depreciation, but you purchase it at land value because you've purchased it without the big house on it.
Yeah. But there's a part of this that we need to be clear as well. That doesn't mean, guys, you go, okay, great, old house, large block of land, I'm going to go out and buy that property now. Now, obviously, it does also depend on location. It's very important. You don't want to be buying a house with a large block of land in some regional area where there's no land scarcity. So the idea is looking at a particular location where you have a well-established suburb, that's wedged into many houses surrounding, and you've got that large block that is, there's a bit of scarcity there to it. So it's just a point that I had to, throw in there.
Yeah, definitely. If it's an area where other investors are already doing the same thing, like the knockdown rebuilds are starting, or the subdivisions on the corner lots are starting, it's good to try and get in and sort of land bank early, or try and be one of the first to land bank, but one of the last to build.
Yep.
But again, that's a strategy conversation to be had with Dragan if that's something that interests you. The larger house will be easier to sell because you're selling more likely to an owner-occupier, so it'll be a more emotional purchase for them. They might pay more for it. Whereas if you buy the older house on the larger lot of land and you sell it without improving it, your target market is going to be investors or bargain hunters. So you're not going to get top dollar on resale unless you realize the potential of that property. So if you're committing to these types of properties, you're inadvertently also committing to doing that value adding or that potential, the realization of that potential. So if you're buying these properties, buy them with intent and with that purpose in mind, whether it's subdivision, knockdown, rebuild, combination of both, adding a granny flat, buy with purpose, because if you don't fulfill that purpose, your resale gets trickier because investors and bargain hunters are not going to pay you top dollar.
Yep.
But if you do the work and you create it or regenerate it into one of those top dollar stock types that an owner occupier will pay overs for,
Yep.
then it's all good.
The other thing I've got to mention a point in, Again, it doesn't mean just go off and buy a house with a large block of land. You do need to do due diligence, pick up the phone, call the council, find out, or a town planner, find out, okay, you had this address, hand over the address, say, okay, my idea is to build or subdivide. Maybe you want to start off with 2 houses and eventually subdivide one of them, sell one and pay down the debts. It's one of the strategies we do here. Just to be clear, it can be done, and you're going to want that in black and white as well. So you don't want to be buying a property thinking there's potential 5-10 years down the track. You're wanting to then go for the strategy of, subdividing, building a house, subdividing, and it can't be done. So due diligence is key here.
Yeah, definitely. And that's why this sort of thing might not be your first investment. You might do this as your second resort, or you might use a buyer's agent or someone that can help you with the due diligence, especially if it's something where you want to buy it now but do the improvements in 5 or 10 years' time, just to help you with the smart buying. It doesn't hurt to reach out to a professional. So if that is something that interests you, definitely consider the 15-minute call with Dragan to help you detangle some of that.
Definitely.
Now, in terms of rental potential, we've touched on this. Your freestanding houses do tend to attract longer-term tenants, whether that's on the smaller block or the larger block, it doesn't matter. Houses will always rent more easily because families need somewhere to live, and families don't want to uproot themselves and the kids every year or two. They want to find somewhere they can stay. Now, a lot of people, when we say that, show hesitation. Oh, the kids will destroy the house. I'll get a dog. They'll destroy the place. That's their home. So if they're destroying the place, they're destroying where they live. So let's give them, the benefit of the doubt there and go, okay, if they're there long term, if I'm losing 3 or 4 weeks worth of rent every year in higher turnover tenants versus they're there for 10 years, but I need to paint and carpet it at the end, well, which boat is the one I'd rather be in, really, when you think of it like that. And as Dragan says, if they really destroy the place, then you've got insurance.
Now, you've got landlord insurance that will cover that.
You've got landlord, and then, just say a new kitchen or bathroom is needed, you then have a depreciable event anyway. So as an astute investor, you've got your safety nets in place, but a long-term tenant will always be worth more than transient tenants where you've got turnover every 6 to 12 months.
Yep.
With that in mind, look at the area that you're buying in. What is the proportion of owners versus renters in the area? Because you still need to consider supply and demand. You still need to consider if you're in an area that's due for gentrification. You still need to consider, what are your future plans for the property? If you're going to knock down and rebuild but be the only brand new house in a 5-kilometer radius, are you throwing too much money at that property? Are you better off, instead of knocking down and rebuilding, just buying something else and collecting the rent on 2 of them? You don't want to overcapitalize. So look at what's around you. How do your future plans impact your potential rent? If you're adding a granny flat, can you justify the expense of the granny flat with the additional cash flow? Or again, are you throwing money at a property that's in an area, like Dragan said, something regional maybe, where you're creating like your own little mini high density house and granny flat, where next door you can buy a nice house on half an acre. So it's no good having half an acre if everyone's got half an acre. But if you can find half an acre where everyone else has a quarter of an acre,
That's a different story.
that's a different story.
That's a gold mine.
It's great.
What I call
Smart buying. Buyer's agents.
it. Okay.
So what
goose.
is the golden goose? What is the ideal Torrens titled property? Something with future potential in an area that is due to gentrify, and you're one of the first people in for buying, but you don't want to necessarily do any work yet. You want to wait for the area to pick up, but you want to get in early. So something with a future KDR, knockdown rebuild, or duplex potential. So you want to try and purchase at land value when a suburb is at that point where all of the houses are almost ready to be knocked down. You want to purchase at land value where you're not paying for the dwelling, but the dwelling can still bring you a rental income so that you can do future work like build a duplex in its place. Renovation or granny flat potential, we talked about corner blocks. So if you buy a corner block and cut it in half, you've got street frontage to both. Or if it's not a corner block, you might have one in front with a battle axe behind. Anything that can be split or subdivided. So anything with subdivision potential, because if it can be subdivided and you can create 2 different titles, as Dragan said earlier, you can sell one to pay off the other.
Yeah.
Whereas a granny flat is on the same title as the main house. you can't sell them separately. So you can't use one to pay down the other. So subdivision potential will always be worth more than granny flat potential, as an example.
Yeah.
Future regeneration of the area. So what's going on around other people knocking down and rebuilding, or are others renovating in the area, are others subdividing? Has recent, zoning rules changed? Is there a higher density area that's been introduced? Has the council reduced the minimum lot size? So the minimum lot size has been reduced. Suddenly all the bigger blocks can start to be cut up. Try and get in early on these things so that you can land bank, watch what everyone else does, see the demand, the supply, see how the suburb regenerates, then have a go. So for me personally, I love a good corner block splitter because, you can reach everything from the street. You can, build a duplex or a house on each side. You can sell one, keep one. So Torrens Title gives you that complete control, obviously within development limitations, but it gives you complete control to completely regenerate that property over what you can do with something on a strata title where you're part of a community and you're bound by the limitations of that community.
Definitely. Guys, if you like what you hear so far and you have questions, we've got the QR code up here, or visit propertysessions.com.au/15. Jump on a call with us, have your questions ready, and happy to spend the time with you and assist you with your questions, I guess.
Yeah, that's it. And it can be more personalized than
That-
that, or you can share your circumstances.
Exactly. Happy to have a chat. Thank you, Amanda.
Thanks for coming. Have a good day.